Welcome back, everybody, from the break. So, where we left off was here. All right. So, again, a little recap of what just happened about 20 minutes ago. So, here we were talking about the products between Pro, Premier, and Enterprise. Now, these are your core desktop versions that are available to you to download. Now, again, I was talking about when you guys are able to access your files, okay? So, if you have a 2015 QuickBooks, right? You are able to use the 2018 and access any of those 2015 QuickBook files. However, once you've taken that 15 and you convert it into 18, that means the next person that uses the file again has to have equal or a higher up version of QuickBooks. So if you at home are working on a 2015 and here in class we work on 2018, if you come to class and you work on 2008 and you come to class with your 2015 and you convert it to 2018, you will not be able to access it at home with your 2015. You would have to upgrade your software. Okay, so so that's a bad thing if you were to do that. Other programs will not allow you to mix and match between if you have a Pro, you wouldn't be able to mix and match with Premiere. And if you have Premiere, you wouldn't be able to mix match with Enterprise. So how that works is for those who are working with Pro, you're able to access Pro. Premiere, you're able to access Pro, and for Enterprise, you're able to access Premiere and Pro. That was just much of the mumble jumble. So let me break it down. So again, because Enterprise has so many items, if you were to access it through Pro, you will not be able to see any of those. You wouldn't be able to see half of those items. So think about it. Going from more than 1 million to only 14,000, you're not going to be able to access much stuff. And on top of that, it doesn't have those extra features such as the industry reports. So again, you can open it, but you're not going to be able to download every single detail. You're only be able to access only about 14,000 files. So right then and there, it's already a big factor of why it's important that you understand what product works for your business, okay, and how it works. So again, understanding that these things happen. Now, again, with the whole 3x3, you're thinking, man, businesses must pay a lot of money. So the great thing about QuickBooks is because of that 3-year rule, it actually allows the businesses to hold out as long as they can. So as you know, you guys are learning 2018. We currently have 2019, and there's currently right now available a 2020. So they come out with a new product every year. Now, with the new product every year, it's just a little more features just to make a transaction a lot more easier. So again, for 2015, there are some functions that you are able to do much more quicker when we're dealing with a newer and model than back then. So again, for most businesses, they actually do not have to get a new QuickBooks every year because it does cost you a lot of money for one program. And if you're trying to have multiple programs and multiple users, your best bet is they're going to hold out as long as they can to try to get every year they can. So for example, if I have 2015, I'm going to upgrade to 2018, get all my 2015 files up to 2018 in the year of 2020, and I still have 3 years more to go. So that's the great thing. Okay, so that means I can access my 2018 files in a QuickBooks 2021 program. All right. So this is why many companies don't throw a bunch of $1 billion into these softwares, because with that given 3-year time period, you're able to access anything. Anything prior to that, so if you have a 2012 QuickBooks, you're able to open it, but it's going to be converted to the latest one. Okay, just understand that. All right, and how are you able to see all these product details? So I'm going to be showing you the function key of F2. So F2 is pretty much going to tell you the details on everything that you have for this QuickBooks. So this one, I screenshotted my QuickBooks. So it tells me here that I have the 2019 QuickBooks Pro, and it shows me that when I installed it, so I installed it last year, way back then, right? It tells you how many I forgot what the word is called. It asks me, or it lets me know how many number of releases, meaning, so if Intuit decides to have a new feature, it's going, and it will let me know how many times I've upgraded this specific product. So that's a good thing that you need to understand, is what a release number means and where to find it. And here it's going to be F2. And I will show you on when we actually move on to actually going into the actual QuickBooks, which we may get to today, we may get to tomorrow. Okay, so again, it gives you the product details, gives you the exact license number, product code, and everything. So for any reason that, let's say you need to, you don't use this computer anymore and you need to go to another software, you're able to enter that product number. However, with licenses, yeah, so pretty much you're given everything. So you just basically load in the computer into your designated computer, laptop, or whatever that you want to put it on. You're just going to use that same code because it is your product. So yes, so this is the details to everything that you're going to get about QuickBooks and what the latest edition is. All right. Now we're going to be moving into Accounting 101. Yay. All right. For those who have taken accounting, this is all going to be a no-brainer for you. For those who have not taken accounting, don't worry, it will be explained in the next part. But for those who are just here, you do not need accounting in order to use QuickBooks. However, accounting will explain exactly how QuickBooks works in the background, okay? So again, you do not need to know accounting in order to do QuickBooks, all right? Accounting only explains how QuickBooks works. So again, what in the world does that even mean? So this is, I will explain it to you guys, and I will show you how it will work when we actually dive into the actual exercises. So again, the accounting focus, here we have the main goal of accounting is to understand the nature of and the flow of a business. Pretty straightforward, pretty standard like definition, okay? When cash is flowing in, you need to understand that there is an equal and opposite way of cash flowing out. So again, understanding that it's pretty straightforward. So when money coming in is equal to the money that's going out. That is the bottom line of what accounting is, okay? And then again, for example, if you made a sale, you are going to be receiving cash and extra in exchange for a product that you purchase, okay? So just understanding that very small fundamental line, it will make sense when we start diving into accounting. So again, when we're looking at any typical business, you're going to be looking at the 5 types of accounts, okay? And they are assets, which is anything that you own, okay? Whether it's a piece of furniture, whether it's a truck, it's the cash that you own in your bank, right? Anything that you own is an asset, all right? A liability is anything that you owe, whether you owe a payment for a car, a loan, people that you owe on a credit card. Okay, those are all considered liabilities, and liabilities are your obligations that you need to pay. Okay, next is going to be equity. Equity is going to be the value of your company. So, most cases when you start up your company, and that's how, and the money that you invest in your company is going to determine what your equity is. Now, don't confuse equity with real estate equity. Real estate equity is completely different. Okay, understand equity as just the value of the company. It increases when you make a sale, and it decreases when you either take money out of it or you when you invest more money into it. All right. And then we're going to be introducing into income slash revenues, which is the same thing. If you incur a sale, right, you're increasing your profits, right? And yes, and any extra income that functions to operate your business is going to be considered a revenue or income. And then lastly, we're going to be introducing you to expenses. So expenses are anything that is required of you to spend in order to have your daily operations for your business. Okay? So again, know that there are 5 account types. No more and no less. These are the standard 5. Okay? And then we're going to be moving into the accounting equation. Now, this is very, 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 very important that you remember this, because this is going to be the fine line of how you can match everything that you own to everything that you owe and what the value of the company is. So exactly what I just explained. This is going to help you, in bottom line, be able to do the daily functions of each business transaction and understand the flow of each transaction. So understanding that assets must always equal your liabilities plus your equity. Okay? So everything that you own is going to be equal to the value of your company, so your original investment, plus anything that you owe to other people. All right? Next, we're going to be looking into chart of accounts. So, in order to even start any transaction, okay, you need to have a chart of accounts. So, what a chart of accounts is, it's some kind of organized way to determine where money goes, okay? That's like the simplest way I can explain it. So, in other words, creating an account is going to determine the flow of the transaction. For example, I purchased office supplies with cash. So I have flowing in, I need to flow in with office supplies. And what's flowing out is my cash. So I need to have an account to separate each transaction into its specific parts. And how the chart of accounts is going to be organized in QuickBooks will be according by account type. So let's look back here. So exactly how you see it right here, assets will always be first. Liabilities will be next. Equity will be third. Fourth will be income. And lastly, fifth will be your expenses, okay? So be sure that this is the order that you're always going to have your chart of accounts. Now, with a chart of accounts, you're going to be also designating. You don't have to. I'm going to show you when we move into setting up your chart of accounts is if you want to, generally it's easier to set some kind of sequence number or some kind of number to indicate each account number or each account name. Okay, so for example, we have here is 1,200 is going to be your money market. So things like that. And what kind of sequence you want it is determined on however you see fit. So if you want assets to be A, your liabilities to be B, and your equity to be C, you could do whatever you want as long as it's some sequential way for you to separate your assets. Your account types, okay, with the associated account names, okay? Any questions about this, okay? One thing that you're gonna get, so this is a screenshot from QuickBooks when you're looking into your chart of accounts. So again, you're gonna have the number, you're gonna have the account name, and it's going to be registered by account type. Now, one thing that you're gonna recognize too is that it's also gonna give you a balance at the end of, on the right side, you're gonna have a balance, okay? Now, when we move into understanding the difference between your permanent accounts and your temporary accounts, there are key features that determine and also separate them as well. And we call that is register, okay? So all permanent accounts such as assets, liabilities, and equity have registers, meaning they have a balance, okay? All income/revenue and all expenses are going to have quick reports. And when we move into doing an example in class, it will make more sense of what I'm talking about. Okay, so they're not going to have balances, they're only going to have quick reports. All right, any questions about everything so far? Okay.
No.
Okay, so here we're going to be understanding that when we're dealing with accounting in QuickBooks, or when we're dealing with accounting in general, we're going to be utilizing the double entry accounting system. So what that means is, again, I gave an example. If we're going to have cash and we made a sale, right? You're having one way of flowing income, or something's flowing in, and you're going to have the equal and opposite flowing out. That is a double entry, okay? So you see your money going one way, and you see the money going another way, okay? So making sure that you have two entries instead of just one. A single entry, for example, would just be cash, and you're just increasing your cash, okay? But in this case, this is us representing the double entry having cash and having sales as an equal and opposite direction. Now, what that entails is the number one rule that we need to make sure that all accountants know is your debits, your total debits must always equal your total credits. Okay? Now, again, for those who don't know accounting, this will make much more sense later on. Understanding that if you have a certain flow of money going one way, an equal and opposite, which is your credit or your debit, is going to happen in the opposite direction. Okay, so understanding that. All right, and let me see. Okay, and then we're going to be moving on to what's called the normal balance of accounts, or also known as I forgot what it's called, but anyways, this is the normal balance of accounting. Okay, so this is how transactions are determined and which way the flow of the transaction actually works. So again, when we're looking into an asset, it's going to be increased by a debit, but it's going to be decreased by a credit. So for example, if cash is one of my biggest assets, right? It's my number one asset. Cash is going to be increased. So if I receive cash, it's going to be increased by a debit. If I spend the cash or I have to pay something, it's going to be decreased by a credit. Okay? Liabilities. Liabilities is something that you owe, right? So if you owe more people, then you're going to increase it with a credit. And when you pay those people off, you're going to decrease it with a debit. Okay? This is the same, similar to equity. Again, if I invest more money into my equity, it would be increased by a credit. And then if I take money out, so I withdraw from my company, I'm going to decrease it with a debit. All right? Income. If I created a sales, it'd be increased by a credit. If I had someone return my stuff to me, because I made a sale, so I had a sales returns and allowances, it will decrease my income because I have to give back the money. So it will decrease by a debit. And then expenses, same thing. As far as they reflect the same thing as assets. So when you create an expense, it's going to be increased by a debit, and you're going to decrease it with a credit. Now, all of this could be mumble jumble to you. I don't understand. All I hear is debits, credits, left and right, right? All I hear is increase and decrease. It's okay. I just want you to understand the flow of this transaction, okay? So just understanding this, because what QuickBooks is going to do is it's going to do all of this for you without you seeing it, okay? So confusing as is, this is something you're not going to be dealing with at all. QuickBooks actually does it for you 100%. Okay? All right? So, any questions to how the flow of a transaction works? Okay? This only comes into play when you are dealing with adjustments. So, chapter 13 is going to be adjustments. So, again, this is more further down along the lines in QuickBooks, making sure that you understand the flow of transaction, okay? So when we are introducing ourselves into QuickBooks, you do have two options on how you want your company to run. You can either have it run on cash basis, meaning everything that you're dealing with is involved with cash. So every single thing, so whether you have a sale or income, you're going to recognize it once the minute you get paid. Okay? And for expenses or any payments like that, you are going to recognize them as soon as you have enough money to pay them off. So with cash basis, you're only dealing with cash. You're not dealing with credit cards. You're not dealing with owing people. That's the most important thing. You're not dealing with people who owe you money. All right? That concept is going to be introduced with with accrual. So understanding when you have a transaction, and let's say you had a sale and you increased your income. Now, with anybody that has an account, for example, right? They don't have to pay you now. They can pay you later because they signed up with your program. They're saying, okay, well, we'll open an account with you so you can buy as much as you want as long as you pay me back at the end of the month. So in this case, when we're dealing with accrual and we made a sale, you do not have to receive cash in order to record your sale. You record the sale when it is earned, meaning that the job is done, that you sold your products. It's when you earn it, okay? That also goes along the same lines with when you're dealing with expenses. Expenses, you recognize them, or payments, you recognize them when it is incurred, meaning when it happens. So for example, I receive a bill from a contractor, right? They're asking me that I need to pay them, but I don't need to pay them now because they completed a job for me. So they billed me. So the day that I received the bill is when I incurred that expense. So that is exactly what this means, meaning I owe them money, but I don't need to pay them yet. It happened because their service has been done for me. It's been incurred. Okay? So the difference between them is when you're dealing with cash, it's when you have cash. For accrual, it's when you owe people and when people owe you. Okay? You don't need to recognize them the minute you receive cash. Okay? All right? So, most commonly, I will tell you this, that when we're diving straight into QuickBooks, we will always be set as accrual basis. And I will show you how you can toggle to cash basis if you plan to start your business off cash basis, okay? All right. And then counting in QuickBooks, okay? So again, everything that you saw and learned about today, dealing with debits and credits, dealing with assets, liabilities, and whatnot, you are not going to see any calculations at all. You're not going to be dealing with how many debits you're incurring and how many credits you're incurring. QuickBooks will do all of that in the background. All you will be dealing with is when we're doing QuickBooks is you're going to be dealing with invoices, bills, memos, checks. You are going to be doing hands-on things such as when you receive a bill, when you pay your bill, right? When you receive inventory, okay? When you have to bill your customers. All of those is your responsibility. What QuickBooks does for you is when you receive a bill, it recognizes it and it will tell you, hey, you owe money because a service has been done. So again, QuickBooks will do the calculations for you 100%. All right. Any questions here?
Lynn, tell
Yes.
them that QuickBooks defaults to accrual, but you can change it manually back to cash.
Mr. Sanchez, I just mentioned that.
Oh, you did? I missed that.
All right. All right. Anyways, so yes. So again, QuickBooks will do all the accounting for you, while all you need to be dealing with is inputting data. All right. So this is why I tell you, you do not need to know accounting in order to do QuickBooks. However, understanding the fundamentals of accounting will help you understand what QuickBooks does for you. All right. So now we're going to be looking into QuickBooks files. So again, I mentioned that when you download portable files, okay? So what am I talking about these files that I'm talking about? So basically what I'm going to be introducing is that QuickBooks has three types of files. Three types of files, okay? It has a data file, okay, which allows you to, it's basically your workbook. It is I don't know how to describe it, but it is the main core, and it's the one that you have, that you're currently working on, that you're creating and you're building upon, okay? And so again, when you're creating your company file, this is going to be your workbook that you're going to be accessing 24/7. I don't know how often you do transactions, but this is going to be your primary file that you'll be working on to update all your transactions. Okay. Then we're going to be introducing you to a backup file. Okay. What a backup file is when you're done with the when you're done working on your file for the day or whatever, how many times you want to stop working on your file, it is best that you back up your file because, again, yes, we're in the world of technology, but however, technology, we can't rely too much on it. Maybe we have too many programs running in the background. The program is too big. I don't know, but there are often times that many people, right, will lose their data in the middle of anything of trying to enter in things. I've had many times where my program crashed in the middle of doing a transaction. So it is always good to back up your file. And basically what a backup is, it's going to back up everything, all your transactions for the time that you set your backup file to be done. Okay, and I will show you how you can set up as well as toggle how many times a day you want to have your files backed up. Now again, example will be Walmart. If they're inputting millions of transactions a day, they best be, having a backup every hour because anything can happen on a computer. The computer decides to crash and give out on you. Any kind of reason for that, okay? So it's always good to have a backup. And where you put this backup file, it's up to you. You can either have it on a backup disk, a backup flash drive. Most commonly, people put it in the same computer, just so then in case they're working on their current one, their file gets corrupted, they can always open that back up because it's on the same computer. All right. But you are able to travel with it. It's just very heavy. Okay. QuickBooks files is very heavy. Backup files is just as heavy. All right. Now, what if I want to email something or I want to put it on a flash drive and I want to easily transport it to another either person's desktop or I want to go from work to home? This is where the portable files is going to help you out. Portable files is the same thing as your workbook. However, it compresses it down so it's easily feasible to transfer. So again, it makes the file really small. And what happens is every time you open up the program and you restore a portable file, it's going to extract all the data and expand everything for you. Okay. Now, once you've created one of these 3 items, okay, once you create a portable file and once you create a backup, that's it. It only backs up for the day that you create the file. Where QuickBooks Workbook, if you just have a regular data file, it will always be updated. You do not need to press Control S. There's no need for you to save it, because it will automatically save every single transaction. So the great thing about that is you don't need to constantly press Control S. You don't need to keep updating and saving it. It will automatically save it for you. Given though, there is a catch. It requires the internet to be able to do that for you. So, if you do not have internet, unfortunately, you cannot do very much with QuickBooks. That's the gimmick, okay? You need to have internet access in order to be able to update your file, to be able to save your file, etc., etc. Okay? And yeah, any questions about the difference between those 3 files? Okay? So again, You have a question?
Oh no, it got on its own. Sorry.
Okay, no worries. So again, portable files is for in case you want to travel, you want to email, you want to go from computer to computer. Portable is good for you. Backup is just in case your workbook crashes in the middle of your stuff, you're able to access the old files and everything will be where you left off. QuickBooks Workbook will be the main file that you'll be using to update all your transactions on, and it will automatically save for you. Okay. Now, again, this is just a little presentation of exactly how QuickBooks is going to work. So, again, when we are introducing into opening our files, restoring them, saving them as a backup, this is exactly how you would see it. So again, most likely tomorrow, since it's almost 11 right now, I'm going to go through all this and hopefully, I'm pretty sure we're probably going to dive into this tomorrow. But yes, this is just a screenshot of when you actually open up QuickBooks. This is the first thing that you're going to see what you want to do. Okay, do you want to create a new company? Do you want to open or restore a file, or do you want to open a sample file? Now, with those three options, you're more likely to use the first two. When we dive into chapter 12, we'll be creating our own company file. But for majority of this entire class, what we will be doing is we're going to be practicing opening and restoring a portable file. Okay? So that's how you open files. Now, if you are currently working on a workbook, at the top where it says where it's highlighted in green, it's going to save the last thing that you've opened recently with your workbook. Okay? If you opened a portable file, it will not be there. It will only recognize workbooks. Okay? So again, let's say I'm in the middle of working on a file, I can just go ahead and access it there. Given if you're working on one computer and you're working on one file. Okay? So if we do have the potential to come into class, you will not have this because we'll be, inserting our thumb drive, extracting, restoring. So we're never going to have the same thing at the top of our, we're not going to be working on the same workbook the entire time. Okay? So then, first thing I'm going to introduce is opening a company file. So again, when you do click opening a company file, you do have three options, okay? You are going to have the options to either open up a company file, to restore a backup, or you're going to restore a portable file. Now, again, we are going to be primarily working with portable files instead of backup files. So, again, when we're opening these kind of things, the next window is going to be, it's going to ask you, well, what do you want to open? All right. So again, with those options, yes. Okay. Now, once we've opened up a portable file or how to, So when we actually open up a company file, it's going to pull up everything that is on that file. So again, when you're doing a portable file, it's going to expand all the content that's in there, and it's going to open up all the files so you're able to access it. And what it's going to do is once you've done this, it's going to ask you, where do you want to save this workbook? So again, when you're restoring a portable file or a backup, it's going to ask you to make a copy of a workbook, and it's going to ask you where to save it. So make sure that you're aware of that, and we will go over an example. So again, when we're looking into how to create a backup, right, it's pretty straightforward. You're going to go to the files and you're going to select create backup. Now it's going to ask you, do you want to do a local backup or do you want to do a previous local backup? For this class, I only want you to focus on creating a local backup. So meaning you're going to create a backup that's going to be on the same computer. Now you can do whatever you want with it. It's just their terms of saying, I want to create a backup on the same computer. Okay? So that's how you're going to create backups. Okay? Then now when we're, okay, so here is where I'm going to open up a portable file. So again, how to save this oops, I think I went up one. How to create the portable file is a little more tricky than it is for to create a backup file. This one, you're going to actually go up to file and it's going to say backup company, and then it's going to give you the option. Oh, I think I went backup one. Yeah, sorry, my bad. So here it's a little different. Okay, so for the first one, it's going to create a backup. This one is going to be different because you're going to be looking on sending a company file. And then that's when you're going to be creating a portable copy of a file. Okay, so again, here we go to file, and instead of you go file save, there is no file save. It's either you do backup or you do send a company file, okay, which is how you create your portable file. Now you can create a copy of this specific one, okay. Maybe you want to have one for you and your other user, okay, or maybe someone who's sharing the same thing. And you want them to be working on it with you one-on-one so you can try to figure out where you went wrong, XYZ, whatever you want to do. You can create a copy of the company file. So that is pretty much it as far as restoring the file, okay? So now we're going to be moving into user interface, okay? Okay, so let me see how we're good on time. So I have a question for everyone, okay? So right now it's coming up to be 10:27, so it's about coming up to be 10:30. Now, this is what I generally ask all students is if you would like, we can push through and not take a break, and I can let you guys go as early as 11:30. Now, I understand I'm talking too much and some of you may be kind of tired. If you would like to take a 10 to 15 minute break, you are more than welcome to, but this is a group decision because I need to know, do you guys want to take a break and go leave early? If you don't, and you do take a break now, I cannot let class early, and I would have to let you go at 11:45. Okay? Anybody?
I don't need a break.
Okay.
Agreed.
Okay.
Need a break.
I don't need a break, but I did have a question.
Okay, yeah, that's fine.
On creating the portable file, if you had a issue that you wanted someone to help you with.
Okay.
Okay, so you make a copy
Mm-hmm.
to help you guys discover whatever the problem is.
Mm-hmm.
Now, are you able to delete that copy once you've fixed and corrected the problem?
Yes. You have every right to delete anything that you want. However, if you're working for a company, deleting is the most dangerous thing that you can do for a company because they're trying to think that you're getting rid of evidence. So they generally
with
tell
that-
you, go ahead.
So with that copy,
Mm-hmm.
what do you, okay, I couldn't find my problem, so I made a copy, you found the problem. Now, what do we do with this copy? Is it a place to file it away? So
Yep. That's exactly
Okay.
what it is. You're going to have to file it away. Now, unless you're given specific directions from the company director or whoever's managing you guys, and they said they give you the okay to delete it, because you have a copy of it. So it's not like you're getting rid of information, but just for legal purposes, it can be dangerous for you to want to try to delete something, like pretend it didn't happen, right? It's an it's an
So you
ethics
don't-
thing.
Okay, so you don't delete the copy, you just file it
Hmm.
in another area.
Correct, correct. You would rename it and say copy as of whatever date it is. Yeah, and that would just be a file, pretty much a dead file at that
Okay.
point. Yes.
All right,
So,
thank you.
yeah, of course. All right. So, again, so yeah, go ahead.
I have a question.
Mhm.
Where does the hard files come in? Like to keep records of all this stuff if something happens in the cloud for the online version or
Mhm.
the desktop for some reason doesn't stop working. Is there a version to have it as a hard file, as in
Yes.
paper?
Oh. As in like a hard copy, like a physical
Yeah.
copy.
Mhm.
So what
Or that's
QuickBooks,
not used anymore?
you can do that. I know that some people do that, for, especially for auditing purposes. They do keep a hard copy. You can. So anything that you have here on QuickBooks is printable. It will give you the options to print everything, whether you want to print a list of all your contacts, a list of all your bills, a list of all the payments that you've done. You can print anything and everything that you want on here if you want to keep it as a hard copy backup file, whatever you want to do it. Now, of course, what QuickBooks is made for is to steer clear from paper and do everything virtual. Okay? So, for example, let's say I received a bill, right? I can actually upload that into the program, so then I have the physical copy, but I also have a digital copy available on the QuickBooks. And what I can do with that is I can also print out another sheet that accompanies it. Okay? So I do, yes, so if your company wants you to do like a physical hard copy, then that's when you're going to start printing out all your transactions and whatnot. Okay?
Oh, okay.
Yeah. But
Thank you.
yeah. But again, most companies want to steer clear from paper and just want to make everything digital. Okay? Again, what is the census? Does everyone want to take a break real quick and come back, or do you guys want to continue and leave as early as 11:30?
Continue. Anyone else?
Oh, did you say can you continue, or what did you say?
Yeah, continue.
Oh, continue. Okay, so we got Alexandria.
Just push on.
I'm good with continuing.
Okay.
Yeah, just continue.
All right, because I only have just one small section. You might actually be let out a lot earlier than that, but anyways.
That's fine with me too, Lynn.
Okay. All right. All right. So we're going to just go ahead and push through and continue. So we're going to be introducing user interface. Okay. So any other questions? Sorry, let me go back. Any other questions about how the files work? Portable in regards to portable files, into regards to backup files. Again, all of this will start making sense when we actually start diving into reading the QuickBooks and actually diving in and navigating through the program. Okay? No questions? All right. Okay, so user interface. So when we access QuickBooks, the first thing we're going to see is it's going to be set up exactly just like this. The first thing you're going to see is the home page. The home page is pretty much going to be your guideline on exactly what to do. So the home page, as you can see, has a nice little graphical scenario set up for you. So this is a sample of if you're dealing with sales specifically, okay, that you need to purchase inventory, right? So as you can see, each transaction is going to be broken down whether you're dealing with vendors, your customers, or your employees. Okay, those are the three main people that is going to be your core part of your business. Okay. So each transaction, so for example, I need to make a purchase of inventory. Each transaction is going to follow a specific arrow and it's going to lead you to the next icon. So in this case, at the very top, very top left, you're going to see the icon where it says purchase orders. Okay, this is where you're making orders so you can purchase your inventory. What's going to happen next is if you go right, is going to be you're going to receive inventory. Then you're going to go right again, and it's going to arrow into entering a bill against the inventory. Okay, and once we get there, it's going to bracket down to paying the bill. Okay, all right. You see how each flow of transaction is going to affect and what you need to do next. So like again, it's pretty straightforward when you're using QuickBooks because with this graphical scenario that's already given to you, you can already know what is going to come next. Okay, so this is the web graphics of exactly how the flow of transactions is going to work. Okay, now that is not the only way you can access your transactions. So what we're going to be introducing is to, again, I just talked about the home page. We're going to be introducing to the icon bar. The icon bar is going to be either you can have it set to the left or set at the top, doesn't matter. But what these are is basically they're quick links to get to the same place. So again, when we're looking at the home page, if we're looking at a specific task or a specific thing, let's say I entered a bill. What's going to happen is it's going to deal with everything that is recording to your vendors. Same thing here. I have a bill, so I'm going to go ahead and click on one of these things. So bill tracker, right? Bill tracker is any bill that is going to be recorded. So it's going to keep track of all your bills and what you need to pay. Now, obviously, with this icon bar, there is an option where I can scroll down. So I don't see my vendors just yet, but it is there. I'm just showing you this is the general idea. Okay, so icon bar will either always be left aligned or you can toggle it so it is at the top. Okay. So again, what an icon bar is, it basically gives you a quick link to exactly where you need to go. Okay. Next thing, the third thing that I want you to recognize is the menu bar. So the menu bar is going to be at the top as usual. It's going to be your file, your view. It's going to be your customers, your company, your vendors. That gray bar is going to be your menu bar. And what they do is when you tap on that, it's going to give you a drop-down menu of exactly what transactions are you going to be doing. So example, I received a bill from a vendor. I'm going to tap that vendor from the menu bar, and it's going to give you a list. What kind of transaction are you dealing with when you're dealing with a vendor? So again, that is 3 things that you can enter your data in, okay? So again, we have the home page, we have the icon bar, and we have the menu bar. And the overall look of it is gonna look just like this. So wherever you are on your page or whatever it is, you have multiple ways of getting to one transaction. So obviously the simplest way is going to be the home page, okay? Second will be the icon bar. And lastly, the last one will be your menu bar. Okay? But don't forget, when we're dealing with QuickBooks, you are going to be required to learn every single way to enter a transaction. So if I ask you to enter a bill, you need to give me all the ways to get there. Okay? Because what the QuickBooks certification exam is going to ask you is it's going to ask you a question. And if you know there are 7 ways to get there, you can attempt the first one, it may say wrong or try again. And then you try the second way, it's going to tell you try again. It will only accept the answer unless you do exactly what it's asking for. So if you end up on the 7th try of how you're getting to enter that bill in, and it accepts that 7th answer, again, you need to be able to know all the ways to get to one transaction. So that's the difficult part about the exam, okay? So we'll talk about that in a few as well, okay? So those are the 3 ways you can enter a transaction, okay? Any questions? Okay. So then we're going to be introducing to what a center is. Now, again, centers generally revolve around the people, okay? So for example, there are a total of 3 centers. There's the vendor center, the customer center, and the employee center. Now, the vendor center and the customer center are going to look almost identical to one another. You're going to get a list of all the people that is involved, and each one, if you click on them, on the right side, you're going to get a little background information on who, where their address is, and what they do. At the very bottom of that right side, it's going to allow you to see every single transaction that you have with them, okay? Again, when you're dealing with the little screen on the left side, you're going to also get a balance with them at the end of the day. So you can get a quick view of exactly how much this person owes me, okay? Or I owe them, okay? So in this case, vendors, if we look carefully, we don't owe anybody any money. So that's good. That's a good sign, okay? So again, this is what the vendor center does. And you're able to search up your vendor too if you can't find them in the list. Now, generally, they are listed in alphabetical order. And yes, and you'd be able to look them up and find their transaction on the right side. Same thing with customers. You're going to have your customer list here, customer info, and your transactions with your customer. When we deal with employees, which is going to be chapter 10, so not in this week, but in a few weeks later, we're going to be dealing with employees. Again, it's the employee center is going to look a lot different from here. So again, when you get the book, you'll familiarize yourselves with it. Okay? Now, entering actual transactions. So again, there are 3 ways or 3 types of ways you can enter a transaction, okay? So the easiest one that you're going to be doing is a form. So again, this is an example. I want to create a purchase order. I'm going to fill it out as if I'm filling out a regular form. So, if you've gone to the doctor's office, right? You fill out a form. This is identical. You say, I want this, this, and this, and this. You say, I want all of it. And if you do preset everything, everything's going to automatically fill in for you. So for example, vendors, I want to choose my vendor, right? I just type in the first few letters of the vendor and it's going to automatically populate as long as I have them already recorded in my QuickBooks. So again, QuickBooks is going to allow you to do a lot more things quicker in a timely manner. Okay? So for example, I want to fill out this form. It will take me 5 minutes to fill it out? Not hard, okay? For example, I want the item. How many items do I want? Or what is the item? What is the quantity, right? I want 10 of them. It's gonna be easy to fill out and it's all based on a click of a button. You don't need to do anything. So that's one way of entering a transaction, okay? Next is going to be via lists. Okay, so again, here I have a list of all of I think this is a list of all my vendors, okay? So what you can do is if you have a list that you just want to put just random people in, you can go ahead and type them all in sequentially. So let's say I want to put my vendor A down, vendor B down, vendor C down, right? I could put them all in a list simultaneously. Okay? Instead of actually having to put them in there individually, you can just do it all at once. So that's how you'll be able to use lists to your advantage to build your company file a lot quicker. Okay? Lastly is going to be registers. So again, I did briefly talk about a register, okay? So all assets, liabilities, and equity will have registers, meaning that there is some kind of balance to them, okay? And they are permanent accounts. They never close out at the end of the period. Maybe I'll do a little side note. Temporary accounts will always stay active because these are the things that are always going to be functioning in your business 24/7. When we're dealing with sales and expenses, those things, when you close them out, the reason why you close them out is because you may re-incur or those things were just for that month. You're never going to get the same sales every single month. Now that would be amazing if you can have the same 100 people come in every single day and do the same amount of sales, but in reality, no. You're going to get 100 this day, you're going to get 150, the next day 120, the next day you're going to have 98. So again, those kind of things you want to close out because they're never going to reoccur again. And another thing that we normally do is when we close out whatever given time period you want to close them out, is this is a way we can measure whether our company is doing good in profits. So again, the best way to measure it is you always start at 0 and you build your way. Oh, I had 100 sales today, so I did good today. I close it out. Oh, today I had 98 sales, so I didn't do so good today. Okay? So that's exactly why we close out our temporary accounts. Now with registers, right? So this is an example of the checking register. So what I can do here is I can go ahead and let's say I wrote a check, right? Or I did something. I can go ahead and enter the transaction here. And I can put the date in. I can also put in, well, what is it? Is it for a bill? Is it a check that you wrote? What number is it? I can type in all in that information and enter it in just as if I did a transaction. It works the same exact way. Okay? Now, okay, so, all right. QuickBooks Help. Okay, so with QuickBooks, okay, obviously the best thing that you can do is if you are unfamiliar with QuickBooks, you don't know how to use it, your accountant is not there. You can go to the help, which is at the top of the menu bar, and you can go ahead and ask the accountant. That is always the number one thing that you can do. Now, with Pro, you need to pay. With Premier, you actually get a free, I think you get a free couple times you can ask the accountant for free, no charge. Enterprise, it's 100% charged. Okay, it's based on how many times you use them. But for Pro, you have to pay. Premier, you get a little free, something free. But yes, if you have a question because you didn't take accounting or you're not quite sure where a transaction goes, you can always ask the accountant. So here, this is where you can get your updates for the QuickBooks. You can also look at your product lines, see what's available for you. You can always get support. Now, for any reason that your QuickBooks for some reason is acting up weird, it's not functioning properly, or there's something wrong with it, you can always go to support to see what things you need to help in order to toggle the issue, okay? And they have a live person 24 hours a day to help support for any Intuit products. All right. And they just have a little fun things that you can check out here for the services. You know, this is also where you can also purchase your services as well. So, for example, when we move into what is it, employees, where we actually need a service that goes along with QuickBooks in order to do payroll. So, yes, you can't do payroll for free. You have to pay for it. Okay? So this is where you can have those extra product information as well. But this is for any time you get stuck on QuickBooks or anything that you have an issue with. You go to help at the top of the menu bar, support, or you can either ask the accountant. Okay? All right. So now that was chapter 1. So again, like I said, if you read chapter 1 or if you're going to look at it tonight, you will see a set of questions. There's only 5. All right? And these are exactly what they are going to ask you. So this is what I'm going to be testing you as a quiz on. So this is where I'm going to ask you the question and you guys are going to just shout out an answer. Okay? So the first question is the fundamentals of accounting equation that governs all accounting is.
C. Assets equals liabilities plus equity.
Yes. Yes. So again, that's correct.
Yep.
That is correct. Yes. Basic fundamentals. Easy peasy. Yes. All right. Number 2. Which of the following statements is true? Okay. So we have to validate which one's which. Okay. Debits are bad and credits are debits are bad because they reduce an income, which I don't know. Okay. Okay. Is that true though? Equity is increased by a net loss. Or debits minus credits equals 0. Or lastly, assets are increased with a credit.
C.
Debits minus credit.
C.
Yes. Okay, remember, the governing rule number 1 of all accounting is your debits must equal your credits. So if you were to subtract the 2, it has to equal 0. So yes, that is correct. All right. Number 3, under the accrual accounting. Okay. I think you guys can read this a lot faster than me. A sale is not required until a customer pays. Income and expenses are recognized when a transaction occurs. C, all expenses is not recorded. Okay, anybody else? Anybody else agrees?
B.
We got Wendy with the B.
B.
We got Ricky with the B.
B. B. B. B.
C.
All right, that's correct. It is B. Yeah, all transactions. Okay, so all income and expenses are recorded at time of purchase. So when the transaction occurs. All right. Question number 4. QuickBooks is.
Double entry.
Yes, it is a double entry system. That is correct. It's not a payroll system. It can be, but you have to pay for it. A job costing system. It can be. All of the above.
All of the above.
Yeah, it is all the above. Okay. So again, when we're diving into job costing, so this is geared towards customers when they want a specific job done. An example would be when we're buying things specifically for a customer. It's called job costing. We do have a payroll system, okay, but we do have to pay for it. But it is introduced because we have employees. And then lastly, it is a double entry system because if cash flows in, then cash also has to flow out. All right, and then question number 5, which is not a method of accounting? Okay. Okay, is it A, menu? Is it B, homepage? Is it C, icon bar? Or D, is it data entry button?
B.
So,
B.
okay, so remember, the QuickBooks certification will ask you negative questions. So it will always ask you questions that are not, and you are correct. Data entry there is no such thing. We've never talked about it. I've never said anything to you about it. So there is no such thing as a data entry button. So again, please be aware that when we're dealing with these kind of questions, to make sure you read the question carefully and make sure you make sure you answer the question that is asking you. So again, it is now 11. We actually went through this. Does anybody have any questions about chapter 1 in specifics? So again, this PowerPoint is available to you on the classroom website. So make sure if you guys would